Hello, welcome to Cash Flowing Windsor, Sudbury, Arson, leading to sleepless nights, quitting corporate with 27-year-old Austin Yeh. Welcome to the Truth About Real Estate Investing show for Canadians. My name is Armin and I've been a real estate investor since 2005, licensed in real estate since 2010, four-time Realtor of the Year to investors. So I've personally invested through many, many good times, and never have I seen so many such a bad time as we are in today. Everyone's experience is different, though. Like our guest Austin, he's doing quite well. Yes, he's had some challenges, obviously, and we'll get into that in the interview. But there's a lot of flippers and speculators out there who are having the toughest time. Even those who bought pretty smart over the last 3 years, even they are having some challenges. But generally, anyone who invested the longest, for example, if you bought before 2020, you're generally faring quite well. I've spoken to listeners who are negative $1,000 or more negative cash flow. A lot of them are having invested in pre-construction condos, and then I've even spoken to some BRRRR investors, folks who have done significant renovations, and they've refinanced those properties, taking a lot of their money out, and now they're negative cash flow. Many people are selling to get their debt under control, and thankfully we've taken on new clients and we're able to help these folks out. We all got into real estate investing to gain freedom and get more control over our lives, control our financial futures, get ourselves financial peace. Unfortunately, when debt gets out of control, then we've lost control, we've lost peace, we've lost freedom. But thankfully, many people who invested right or invested for the long term, they've honestly have lots of equity in their properties. So even our clients, they're selling and they're taking significant profits, six-figure profits. And of course, they return their capital and they reduce their debt. Then even last week, I put out a request for income properties, as we still do have some clients who are in the market for small multifamilies. Some of our requests was specifically for duplexes or better last week, and I've never received such a large response. Numerous legal, even small multifamily properties in top towns just outside the GTA, which the ones that cash flow, which fit the sweet spot for our clientele. One interesting observation: almost none of these small market multi-investors are overly motivated to sell. Why? Because they invested right. Those who invested purely for appreciation without an eye on cash flow, those are the ones who are having a tougher time. I even spoke to an investor who is operating an Airbnb and licensed in a town with very strict Airbnb licensing. The location is fantastic. It's in an area that draws tons of tourism, but they are having difficulty selling it. Just know that anytime you're going against the local bylaws, including if your property is not legal, it's, for example, if it's not a legal duplex or you have units in the property that are not legal, then that will be a more difficult property to sell in this market, because the financing is more difficult, and honestly, buyers are just being pickier these days because they can be. There's a lot more property to choose from, but understand that's only for the short term. Interest rates will not stay high for forever. And again, this is why here at iWin Real Estate, we've always focused on legal small multifamily properties, because when one focuses on cash flow, one can survive these tough times, and when it's time to sell, there's more buyers for quality income properties. And also, as predicted, with housing affordability having eroded over the years, people honestly need more income to qualify for property. So buying a property that has tenants that pay rent helps pay the property, so people can afford more when they're buying an income property, even if they're going to especially if they're planning on living in it. Also understand we are in the middle of summer, so it's called seasonality, where the long-term rental market and the resale markets, they just come down. Even for like myself, for anyone watching the YouTube, I am recording this. We rented a cottage. We are technically not working this week, sort of working a little bit, but many people are on vacation, so a lot of people are not focused on buying or leasing right now. Add to that, the Bank of Canada raised interest rates another 0.25% last week, bringing the overnight lending rate to 5%. I know many people are unhappy with that, but the markets did predict it. If for anyone who follows the news, pretty much every bank predicted that would happen, and also pretty much most of the smart money thinks that there's a chance of another increase later this year. I know some people who think there'll be possibly two, uh, and also there will not be any interest rate relief until June, at the soonest June next year, June 2024. So elevated rates will be here for a while. So for many, it's survival mode. For others, they're for those who are honestly, it's the ultra rich are just getting richer because they're the ones who are still buying property, while others are fearful. For Cherry and I, we had some issues with our portfolio in St. Catharines. So in order to improve cash flow, I had to fire our St. Catharines property manager, as our rents were underperforming. Uh, Rents were coming in lower than I expected. New leases were being signed for less than I expected, and also we had some vacancy. And as a discerning investor, like any investor, uh, I personally hate vacancy. I think we should all hate vacancy. Now, I don't like to use the word hate often. I use it sparingly, but nothing ruins a real estate investment like vacancy. Ask any flipper or BRRRR investor. Uh, so after an on-site tour that I did back in May, I took notes, I took pictures, I spoke to the tenants. Uh, after that on-site tour with the property manager, I knew that I couldn't trust them to continue working there. So I actually immediately assigned all the work to my handyman, who I trust, I've been working with for close to 10 years. He referred me to a local leasing agent, and I'm happy to report that we signed a lease, and our property will be fully tenanted by September. So the previous property manager was either negligent or didn't know what they were doing, because my property was experiencing vacancy because it didn't show well. I had burnt out light bulbs. It badly needed a paint job. One bedroom door was broken. One bathroom had drywall damage. All generally minor things. Hence, the previous student tenants did not renew their leases, nor did new tenants want to sign. I don't blame them. In the end, the work to repair the property was under $2,500, and we signed 3 new students for close to $2,000 rent per month between the 3 of them. So we got near top of market rents, higher than what the previous property manager was signing for, and all the existing tenants are happy with the change in management. I'm saving money, and now I'm making more money as well. Uh, if you want to get an on the street understanding of how much of a landmarks market it is in the student rental market, for those who follow the news, there's a lot more international students in Canada than ever. So the smallest bedroom in this house is just under 10 by 10, and just under 10 feet by 10 feet, which is normal for most student rentals. It's just common that there was always one small bedroom in every house. So this room used to fetch only $400 for the room before the pandemic. $400 per month before the pandemic. We just signed the tenant just signed for $575 for that very same bedroom. It's the same bedroom. Like, we may have painted it, but nothing else is different about it. It's still the same size. That's an increase of just over 44% in just over 3 years. 44% in just over 3 years. So thankfully, that beats inflation. I'm very happy with this investment. But the lesson is that not all real estate professionals are equal. It's not uncommon for things to not work out with a property manager. I've been through about 6 property managers myself personally. One just needs to keep tabs on them and take action when necessary. We disagreed on management styles. To them, vacancy was acceptable in this market. For me, I don't know if I know better, but I have clients that own about 100 student rentals, and we all cater to the top 20% of the market. I was the only one experiencing vacancy, so I knew something was wrong. So here at I Win Real Estate, we play to win. I enjoy winning. I enjoy cash flowing. I despise losing, aka vacancy. So make sure everyone on your team is playing to win, and everyone's rowing in the same direction. It's the way to go in investing, and make sure everyone on your team knows how to achieve those wonderful returns. If you are an investor and could use a second opinion on how your existing portfolio is performing, maybe you have some properties with equity in them, but they're negative cash flowing, then feel free to reach out to us at iwin@infinitywealth.ca. The year is halfway over. The value to you is to make sure that each property is serving you. And if they're not, we can suggest better uses for your investment capital. Just like the stock market, things change frequently. Several investment strategies no longer make sense. It's time to review and reset your portfolio. set it up for future success. It's a 30-minute call. There is no charge. Just reach out to Iwan at Infinity Wealth, and one of my coaches will get back to you. If you're more on the information education wave right now, we do have an upcoming Iwan meeting, all online. It's actually next week. It's coming Tuesday night at 7:30 p.m. It's all online on Zoom, where I'll be sharing the latest market update. I'll be talking about interest rates. I'll be showing the data on when we'll see an interest rate cut. I'll be also talking about something that's of massive interest to myself, artificial intelligence. And I'll be sharing specifically which AI tools that I've been using today in our business. AI is already causing massive disruption, and in my experience, it's been for the good. And it's going to be great for those who know how to use the tools in order to be more productive. I've already saved myself thousands of dollars in using certain AI tools, and I cannot wait to show you how. As always, I'm on a mission of truth seeking to find out what works best and what doesn't work in my business and portfolio of real estate properties. The next Iwan meeting, again, is Tuesday, July 25th at 7:30 p.m. Eastern Standard Time. Also from my team, Coach Tim Hong will be sharing how he and other clients are dealing with high interest rates and rebalancing their portfolios. These unprecedented times, as we navigate the uncertain terrain of high interest rate environment, we understand that managing your investment properties may seem more like a burden than an opportunity. This is an opportune moment to rethink your strategies, seize these opportunities that these high interest rates are currently yielding. Yes, that's right. The smart money is taking advantage. They're being greedy right now, while others are fearful. There are great opportunities now, as many sellers are being squeezed by high rates. So being a buyer is a winning strategy in this market. Just make sure that you're set up to be a buyer in this market. In the face of change, knowledge is power. Embrace this opportunity to enhance your understanding, refine your strategies, and prepare for success. Your investment properties don't have to be a source of worry in these high interest rate times. Instead, let them be a powerhouse for your wealth generation. Leverage my team and I's vast experience. For those who enjoy an in-person experience, we are hosting an Iwan Mastermind Tour the following Sunday, July 30. It's the Sunday. It's the following Sunday, July 31st in Kitchener-Waterloo, where we will be touring 2 income properties, and there will be a lunch as well. There's nothing better than learning hands-on, on-site, in person, hanging out with like-minded people, and that's from my experience. Unfortunately, I won't be able to get there. Cherry signed us up for our family camp, a family YMCA camp, so I won't be there at the event, but Tim Hong will be. So make sure you're on my email newsletter to stay connected with all these best-in-class educational events. One can register on my website, www.truthaboutrrealestateinvesting.ca. On the right side, just give your name and email, and then you'll be registered to receive all the latest and greatest event information. And if you have friends and family who care about improving their financial futures, then please invite them along too. On to this week's show. We have a very real conversation with full-time professional investor Austin Yeh, who does it all. He does wholesales, he flips, BRRRs, negotiates his own cash for keys. He's got good stories to share about that. Several good stories to share. He's a podcaster and a meetup host. And honestly, it's not all pretty, which is why this show is called The Truth About Real Estate Investing. Austin shares how he's had to rebalance his portfolio, how the wholesaling market was down, what his short-term problems are. Because again, he's very successful, but he does have short-term problems. But his success has led him to be able to transition out of his corporate job. He's only 27 years old as well. And also, he started off investing in Windsor, Sudbury, and now he's even in downtown Toronto. His career has definitely changed a lot, which is what I really enjoy about this episode and learning about Austin's journey. Again, Austin shares how he started learning at local investor groups, connecting with locals to build out his teams. We walked through the numbers of a couple of his deals. Austin doesn't candy coat the challenges that come with buying ugly properties, including a case of arson, where his property was intentionally burnt down by criminals. The phone call his partner got from the police, and that's how he found out about it, which led to sleepless nights if the insurance would get paid out, and how Austin's the markets that he targeted before, the markets and the properties he's used to target, how they've evolved over his career. This is a very real Truth About Real Estate Investing episode, where problems are not always worth the profits. Hopefully, my friend, one of you, our 17 listeners, can take away how to improve upon your real estate businesses. Leverage the lessons from this episode and the 300 plus episodes before this one. To follow Austin, you can find him on Instagram at Austin Yeh, Austin, Yeh, YEH 6, number 6, Austin Yeh, or on if you want to follow Austin's podcast and network meetup, you can check out him on Instagram at Rise Network Event. All right, please enjoy the show. Hi, Austin. What's keeping you busy these days?
A lot is keeping me busy nowadays. We talked a lot offline, but I guess we'll dig deeper into it. I'm going through I bought a couple of properties last year.
Yeah.
Going through appraisals, that's a little bit of a mess. I'm doing some fixing and flipping. I'm doing wholesaling. Wholesaling has slowed down pretty tremendously, despite the market picking up on the MLS. It doesn't necessarily translate to investor demand all the time. Yeah, so I mean, there's a lot of things: buying properties, selling properties, selling a decent amount of my portfolio, not decent amount, but selling some of my portfolio, where interest rates have went up significantly, non-payment of rent with tenants, dealing with that. We can go on and on, but that is it in a nutshell.
Okay, that was a lot. Okay.
Yes.
For the listeners' benefit, I asked you before recording, how many properties have come through your portfolio?
Yeah, I would say about 32, 33. I've owned 25 or 26 concurrently. Right now, I'm probably at 17-ish or 18-ish now. I don't always, as we talked off, I don't always keep track to my detriment, but that's sort of mental math. I think that's where I'm at right now. I sold a decent amount over the last couple of months for sure.
How do you decide whether or not you're going to keep a property?
Well, over the last few months, that was pretty simple. The market decided for me, right? Fortunately, so I started investing at a good time, right? Where the market was doing its thing. Prices were appreciating.
What year? That
was end of 2018. I got my first property. I closed on it December 2018. And the market was doing obviously pretty well. A lot of my portfolio to begin with were single family houses, scaling up to duplexes, triplexes, 5 units, 6 units, then 8 units. A lot of the properties that became negative cash flow were these single families because of obviously what interest rates did. And so that was that was pretty, for me, my thought process in selling it, I thought the market wasn't going to recover very quickly. It would probably be sideways for a while. Obviously, I was proven wrong, but it was going to be sideways. So I wasn't going to get appreciation. These mortgages were with RBC. So I was paying interest only, so not getting equity pay down, and they were cash flow neutral. So what was the point of holding them if I didn't have faith in the market recovering at that time it was like Mayish around that period. So it was a pretty no-brainer for me. The difficulty I faced, they were all tenanted, right? And so really the active buyers over the last few months were first-time home buyers or people, end users. So I had to negotiate with the tenants, cash for keys, get them out, and then list the properties for sale. So the vast majority of my sales have been these smaller single-family homes, but these multifamilies, fortunately, I haven't leveraged to 80% loan to value. I quit my full-time job in February 2020, so I wasn't able to leverage them anymore after February 2020. And we know the market ran up since then. So just got rid of the single families, kept the multis for the most part.
So you've been through a lot.
Yes,
in
a
just
lot.
5 years.
Yeah.
What have you learned?
I learned a ton. So let's get started with...
Actually, let's take a step back. Because you invest, so you live in Toronto.
Yes.
Where do you invest?
I invest in Windsor, in Sudbury, other tertiary markets. I've invested in like a small city an hour out from London.
What's it called?
It's called Stratfordville.
Excuse me?
Yeah, it's like a population.
Stratfordville?
Yeah, Stratfordville. I know what you're thinking. It's not the same one. When I tried to send it out to my wholesale list, everyone was thinking about the other one too. I was like, no, this is Stratfordville. I'm a stand-up comedian. You're just dying right now. That was actually one of the tenants
Damn.
that actually stopped paying recently that I had to deal with.
Are they still alive?
They're still alive. I guess that we're going to get into that sooner too. So
Right.
our audience will know what that means.
Population of Stratfordville?
It's like 1,000, 2,000.
Oh my God,
Yeah,
really tiny.
yeah, it's very small. It's about 25 minutes from St. Thomas. I want to say 45 minutes from London. But funny enough, I honestly don't know what really drives the market there, but the house prices there are quite expensive.
Ontario's messed up, man.
But it's more expensive than St. Thomas and some of these other bigger cities. So like I don't know what the appeal is exactly, but for me it was just like a BRRRR. It was a flip, and then I was like, oh, you know what? I might as well keep it because it's a duplex. I got it extraordinarily cheap. So sort of my investment philosophy, and it's changed since then, was to just find deals that I can be in and out of very quickly. Make money on the buy, complete the renovations, BRRRR, refinance my money. Because I'm a wholesaler, so I'm able to get great deals at pretty steep discounts. So for me, I wasn't really market dependent. I would go wherever the deal was. And that has led to some headaches now. So I've definitely realized why being focused in a particular market is better than spreading your portfolio wide. But it's also, at the same time, I'm not going to say that it's a completely bad thing, because it's helped my net worth tremendously as well. So like there's been pros and cons of doing that.
How do you source property as a wholesaler?
Yeah, as a wholesaler, so I was an investor first, right? So I was buying properties, and a lot of what I was doing was just networking with other investors in Windsor. That's where I started off. Then doing Kijiji before Kijiji became super popular, going on Kijiji every day, refreshing the page, being the first person to contact any new advertisement there. Cold calling realtors, it was a popular one that I was doing then and now as well, right? Just like looking at expired listings and making those cold calls, door knocking, doing low cost lead strategies is how I got started off with
Low cost, high effort though.
Yeah, low cost, high effort. But I was an investor first, and I wasn't willing to, like as investors, a lot of the money's like thrown out in the market a lot of the time. So I didn't have a lot to start off with. But I realized that obviously you can't scale that way in the wholesaling business, because the lead flow isn't consistent, especially when you're doing it full time. You're getting leads maybe once, or you're getting deals maybe once every 3 or 4 months if you're doing that. Good deals. But it's just not consistent enough. So then we started moving over to like flyers. We did bandit signs, which are those we buy houses signs, and just sticking them down in grasses in high traffic area, digital marketing, SEOs. We did a little bit of everything. Everything works. You just got to obviously work it hard enough. And right now, kind of what we're seeing in wholesaling, we're putting a lot more focus back into the high effort, low cost strategies, because what you're seeing in wholesaling is your assignment fees are slimming out, right? Just generally, people are less willing to give $50,000, $60,000, $70,000 assignment fees, where it used to be our normality. If you didn't get a $50K assignment fee at least once every month, you were doing something wrong as a wholesaler. But your marketing costs has also increased as well. And your buyers had slowed down as well. So even if you get the deal, dispoing it is another story. Kind of what I was alluding to earlier is that the market's picking up, but a lot of it is end users, right? And your buyers list is mostly consisted of investors. So how many cash buyers are really active now? There's still a decent amount active, but nearly not as much as what we were seeing before. So as margins are slimming, expenses are increasing into wholesaling, we put a lot more emphasis back into high effort, low cost strategies to get us through sort of this downturn.
That was a mouthful.
That was a mouthful.
Before, when you came into the office, I asked you about how has the market gone for a wholesaler?
Yes.
Because you've gone through like the biggest downturn we've had in my recollection. Mm-hmm. So yeah, how did you fare in the downturn? And you're saying people are coming. Let's start with the downturn.
The downturn, yes. So here's the thing. Everyone was there were wholesalers everywhere, and everyone is living off the high of wholesaling. You could get deals under contract that for me were marginal deals. I was like, I wouldn't do this, but I'm not to tell people what their business plan is. If someone wants to buy it, sure, that's your business plan. I trust that you run the numbers. So people were paying, wholesalers market as is value. I've wholesale deals higher than my marketed as is value, right? Because the market was just so crazy. And as a result of that, we pivot. So we were doing a lot of we had a team where everyone was getting paid, or majority of people were getting paid variable, right? Based on deal flow they bring in, so on and so forth. But when you're bringing in the type of assignment fees that we were during a hot market, it made sense to start fixing your costs so you can keep more of the spread. So near the end of 2021, we started making hires or transitioning people to fixed salary plus commission. So we were keeping more of the spread to ourselves, but that wasn't necessarily prudent in a downturn market, right? Like we started our wholesaling business during a hot market. So I don't think anyone saw what was going to happen in 2022.
Yeah.
So that definitely impacted us drastically. With deals that were getting under contract, it was impossible to find a buyer. Cricket. Sometimes we would have one people reach out. Sometimes we wouldn't have any people reach out. And it was during that time where, our fixed expenses were now high. We're paying like $25,000-$30,000 a month in fixed expenses, bringing in zero costs. Not zero costs, bringing in $0 in revenue. So, I mean, how long can you operate a business like that? And what was worrying me is that with wholesaling, advertising is what drives your revenue. If you don't spend dollars in advertising, how are you going to get deals unless you do the high effort stuff, right? And so with your fixed expenses really high, man, like you don't want to spend $10,000 in advertising, right?
It hurts.
Yeah, and especially if there's no buyers, which is what we're seeing. So we're negotiating with people, being like, hey, look, like this is where the market is right now. Like, are you okay to go back to variable, but you can get a higher percentage of the variable assignment fee, right? So,
And how'd that go? How'd that discussion go?
obviously, like they knew what was happening in the market as well. So not well. So we did our best to try to pivot. So we're like, okay, let's bite the bullet and start advertising, start doing different things, start connecting with realtors directly, taking advantage of a realtor's buyers list. We were able to move maybe a deal a month, but during that like super downturn, but that's not enough to keep the lights on. And after a certain point, we did have to, lay some people off, change our business model, slow down and take a step back and rebuild it upwards. So we were impacted from it, but very fortunately, during the good of the market, we made a lot of money. So we're able to sort of sustain that downturn,
Right.
but we didn't want to just burn all of that money. So we took a step back, took a look at our business and slowly rebuilding it to make it profit, which it is profitable again, but taking things slower and steady now instead of just like, trying to maximize margin without any regard to risk. So yeah, I mean, that's a big learning lesson that we had there.
Right. So now we're recording this in May.
Yes.
Everything looks like we're well past the bottom.
Yeah.
Is that your feeling as well? We're well past the bottom?
Yeah, definitely. Sentiment has picked back up. Again, a lot of it is end users, I find. So what we're seeing on the MLS here, anyone who goes on Twitter, they see realtors consistently tweet out like, oh, 20 offers, 30 offers, which is not untrue. A lot of great listings are getting that, but that doesn't necessarily always translate into the off-market world. Because think about it, like we have a different clientele. We're targeting investors and have numbers and proof for investors. Not necessarily. If anything, they've gotten a little bit worse than May, right? There've been a few more rate hikes since May, and no one was buying in May. So we're finding that these multifamily properties that are cash flow negative on onset, there's not much interest in it. People want vacancies. People want vendor takebacks, right? To be able to cash flow a little bit during the transition phase. With the single family homes, people want very large margins on it. Understandably so, because I'm doing flips as well, and on my flipping side, I'm a shark, right? I'm like lowballing. The numbers really need to make sense for me to get into these deals. So we are finding the market is picking up on wholesaling. Definitely, don't get me wrong, but not nearly the extent of what we're seeing on the market, right? But that being said, there is good opportunity out there. I was speaking with another wholesaler who had a deal out there, no interest, no buyers, so they wholetailed it. They closed on it, cleaned it up, listed it, and made close to 6 figures in profit. So they're it's investor psychology, right? There was a deal that we marketed at $550,000 as is value for $470,000. No interest in it. We had 1 or 2 walkthroughs. No one wanted it, so we had to let the deal go. And the seller listed on the market. 1 week after we let the deal go, it sold for over $550K. So the numbers are on point, right? It's just like investor psychology. If someone was to negotiate us from 550 down to 470, they would buy it. But if we listed it at 470, they want to negotiate us down to like 400. So there are opportunities out there in the market right now, in my opinion, but you do need to be a little bit wary of, you got to make sure you crunch your numbers and you have confidence in these deals.
It's interesting that because we're talking about buyer psychology, investor psychology, because I've spoken to many people like, I'm going to wait for the crash to buy. I'm going to wait till the crash to buy. Where'd those people go?
Yeah. Yeah.
Right.
For sure. And for myself, speaking about investor psychology, I would consider myself a savvy investor, but sometimes it does you fall victim to it at times, right? So when I listed a single family home last year, it got appraised for like 330 or 340K in 2021 or like 2020 maybe. And I listed it on the market to deleverage, wasn't cash flow positive, like sort of the reasons I mentioned earlier in the podcast. And I got an offer at like 270, and I was like, no, like there's no way the property's worth more. I was talking myself into like, I'm not selling it at that price because it should be worth more than that. Like people are just scared, so on and so forth. But that's invested. The market dictates what it's valued at, right? So after a few days, I took a step back. I was like, I'm not going to get any better offers. And so we negotiated with that party and just ended up selling to them. So even a savvy investor can fall victim. And speaking of that, like I bought in a couple of properties in November 2022 and December 2022, right? Which were good deals, obviously, because the market's picked back up since then. But going into those deals, like knowing that the market was in a downward trend, I was able to negotiate different things, but I still didn't feel confident with 100%. Anyone who says like, yeah, I'm buying this deal and I'm going 100% confident, like, all of the numbers check out, so on and so forth, you probably it's probably maybe the same investors that if things change and the tides change, you're going to get caught again. Like even for me, where the numbers checked out, things are perfect, I was able to negotiate vacancies, all of that stuff. Still in the back of my head, there's a voice. What if the market corrects further? Right? It's just that little voice in your head. And that is investor psychology 101. I almost talked myself out of those deals. I'm glad I didn't, because now with the market picking back up, all of those are, I made several, not several hundreds, but 100,000 plus in equity on several of those projects, right? But if I was to fall victim to the fear and that voice in my head, then I would have lost on all those opportunities.
So you're connected with the wholesaler community as well.
Yes.
I've noticed a lot have gone quiet. What have you noticed?
Yeah, a lot of the smaller players I think you're referring to have definitely gone quiet. They either didn't have the relationships with the buyers, or they never really had the skill set per se, because at that time you lock up anything, like even things close to market value, and you could still make a 10 or 15K fee, right? So those wholesalers have kind of came and went. But the wholesalers who really do treat it as a business are still actively marketing deals. Like I can name a couple off the top. I'm not going to name names, so I name a couple top of my head that are still actively marketing, who are still actively moving deals, right? But they're not obviously not making as much money that they would have in the past. But honestly, it's with any business, right? Business moves in cycles. Like remember when the pandemic hit, all of these restaurants, can I swear or no?
Yeah.
These restaurants ate shit, right? Like when the pandemic hit and they were struggling. Now it's our turn to struggle, right? Like, and it's our turn to show resiliency. Not every restaurant survived during the pandemic. Same thing with wholesalers, same thing with real estate investors, same thing with fixing and flipping, right? Like it's our turn to eat shit, and the resilient, the risk mitigated, those will survive, right? So yes, a lot of wholesalers are quiet. Some are still moving deals. Some have pivoted their strategies. They're seeing all these different unique things. I'm seeing wholesalers say, take this like survey, and we've done it as well. Take the survey and you can win XYZ, because they want to see which active buyers are still buying, and you can make those phone calls. What exactly you're looking for? What price? I have this lead. What price does it need to be at? And you work one-on-one with these buyers. I see other ones that say, we have no price, throw an offer, just so they have an idea, which is kind of clever. It's risky, but it's sort of clever too, because people want to feel like they got a deal, right? And that person made like a 90K fee on that, right? They're like, okay, I'm going to negotiate around this ballpark. Boom, did it. That person made, like, there's no perfect answer. I think everyone's kind of throwing stuff and seeing what sticks, which is the beauty and the risk of entrepreneurship, right? In times like this, you got to figure out what's working. For me, what I've been doing is, I understand the market's picking back up. A lot of it is like, end user. So we've been cold calling a ton of realtors. we've been SMS blasting a ton of realtors. When we have a Hamilton deal, you'll probably get an SMS blast too. It's just like blasting, like, hey, we have this off market deal. Bring your buyer client. Here's the buyer's package. Let us know if you're interested, right? So we've been catering towards end users utilizing realtors, because realtors, they want a commission. You probably know a lot of realtors want to make a commission, right? Because they also are not making as much as they were before. So we're kind of pivoting who we're targeting to in that way. Has it worked yet? Once or twice, but that's enough for me to build proof of concept and continue down that path. There's no perfect answer to this.
Fascinating stuff. Let's go back to early days. So can you give me an example from like the early days that you think was a good deal? Yeah. Something you're happy with?
Yeah.
Pick a city.
Sure. Most of my portfolio was in Windsor.
Okay. What did you buy in Windsor?
So for example, I bought a duplex off the market with the vacant land beside it. And this is when I was just doing all of the different sort of high energy marketing strategies, low cost. This was via Kijiji. I constantly refreshed the page, got in contact with the seller who just literally listed. So I was the first viewer.
On MLS or on Kijiji they listed?
Kijiji.
Oh, so for sale by owner?
For sale by owner. That was back when. Nowadays, Kijiji listings are worth more than what the MLS listings are. So times are a little bit different then. But was the first person that spoke to them, build rapport, and then had my contractor go through there, threw in an offer. So this one was a duplex, vacant possession, which is amazing, vacant land beside it. I got it under contract for $250,000. It was worth, like, we got it appraised by the bank when we went through bank financing. It got appraised at $330,000 as is. So we did like very cosmetic renovations and then got it further appraised at $370,000. We refinanced that in February 2020, and we haven't refinanced it since. So it's probably worth closer to $500,000 now because of that vacant land, because of what happened in the Windsor market, right? But a more recent deal, I mean, I don't know if you have any questions, or did you want me to go
Let's finish off this example.
Sure.
How big was the lot?
The lot was 65 feet by 150 feet depth, I believe.
Where was the vacant lot? What was that?
Yeah, so the vacant lot was 30 feet, and then the duplex was 30 feet, or a little bit more than 30 feet. Yeah.
Okay.
Yeah, so they're just
it's like a double wide lot.
Yeah, exactly. Yeah. So we haven't severed it yet. It's a long-term thing. We could plan to develop on it if I choose to go down that route. I can sever it and sell it off, but I'm just land banking right now because the refinance of the duplex paid for that lot pretty much.
Fabulous. Area's good. Tenant profile's good.
Yeah, it's like a student rental area.
Okay.
So a lot of students are transition tenants every year, which I like. So it's a decent area for student rentals, not so much for families.
Mm-hmm.
Yeah.
And so, were you driving to Windsor to do this deal?
No. So I'm a pretty lazy guy in terms of like driving. It was a struggle for me to drive down here too, and it's only a 35-minute drive.
Because Windsor is what, 4 or 5 hours?
It's 4 hours away. Yeah, and even wholesale.
Each way.
When we get deals, like they're all like Sudbury, we get deals everywhere, right? Like I am a firm believer of hiring things out, right, and just hiring it to the right people. So, look, I'm not
Sorry, have you never seen this house?
I've seen it when I visited Windsor, yes, but during the entire BRRRR process, maybe I went there once, but even then, I don't remember even stepping foot there. It's just like referrals, right? Like just when I was grinding away at Windsor when I was initially starting, I would visit there every week and meet realtors, meet investors, meet contractors, and meet people. But once you have that team set up of reliable people, you don't necessarily need to be there per se, right? You just need to have people that you can trust, rely on your power team. And so my contractor knows way more than I do. And so I'll get him in there to look through what needs to be done, so on and so forth, get a home inspector in there. I usually get home inspections, right, before putting in a clean offer. I almost always like to get a home inspection or a contractor in there. And yeah, I mean, they know way more than I know. So there would be no value of me going there, right?
Right. So
yeah, I just trust the professionals to do it.
How did you build a reliable team? Like, this is one of your early properties. Like,
yeah,
you didn't have much of a rep or a relationship with these folks. How did you do it?
Yeah, I go through, because I'm all over the place, I kind of go through like a systematic approach. The first thing I do is to jump in these investor communities on Facebook and say, hey, can I connect with an investor in Sudbury? Can I connect with investors in Windsor? Few people message, or I'll use the search function, see who has asked that question before or has invested there, DM them, get on a call, ask them who the realtor is, contractor, whatever they're willing to share, right? Get on like 3 or 4 calls with these investors, and then call their power team. So if they shared realtors, I'll get on 3 or 4 calls with realtors. I'll get an understanding of good and bad neighborhoods. I'll get referrals from realtors and contractors. If a realtor doesn't know a contractor, I'm not even going to use them, right? You're not investor oriented. So then my contractor list continues to build out, right? Property management list starts building out because the investors share it and the realtors share property managers. Get on calls for several property managers. Then ask them what are good and bad areas. What are the rent rolls of like 2 bedrooms, 3 bedrooms, 1 bedrooms? And then ask the property managers, do you know any contractors as well? So it's almost like what do you call it? Like a tree diagram where it starts off with a couple investors and it branches out to multiple realtors, branches out to multiple property managers, contractors, and just go down that list and get a feeling of. At this point, I kind of use the gut instinct as well of who I trust, who I don't, if they've been mentioned several times, things of that nature, right? And I go through the same thing in Sudbury and Windsor. It's just following the same sort of systems. But I do go down there at least a few times before I decide to commit to invest there, right? Just to meet not only people on my power team, but to meet the investors, to build a relationship with these people, because seeing and speaking to someone face to face is different than just over the phone. But once I have that all set up, I find I don't need to step foot in those areas again, unless I'm doing cash for keys conversations. That's the only time I would step foot in these cities.
Yeah. So we were talking about what is the work that's high enough value for you to do personally in person.
So people love to say property management's a $30 an hour task. Yes and no. It is when you're just like your property's fully stabilized and they're collecting rent, getting snow grass removal and small tenant complaints. It becomes $1,000 an hour plus task when you're dealing with tenant troubles, because your property manager, no matter how good they are, and I've worked with so many different property managers, they're not going to care to deal with the tenants in a similar situation as you. They're going to serve the notices, and that's pretty much the extent of it. They're going to go to the paralegal and all of that. They're not going to build their relationship with the tenant. And why should they? They're managing 200 units. What makes your unit any more special than another investor's unit? Nothing, right? They don't have the time capacity or the resources to speak to every single tenant. And so I've had situations like the most recent one in Stratfordville, for example. One of the I see you're dying of laughter now. One of the tenants. So I got an email from the property manager. It was an N5 saying that the tenant upstairs threatened to kill the tenant downstairs, and all of that. Then they made rent on top of that. So I got like 2 notices. Kudos to her for filing the paperwork. Obviously, that's her job. But then I was like, okay, I know how this goes. It could be a year-long process. Non-payment of rent could be a year. If they get evicted, they're definitely going to destroy the unit. Let me just pay them a few $1,000s or like negotiate with them, figure out what exactly is going on, and then have them, and then hopefully get them to sign an N11 in transition. Any landlord will see, oh my God, a tenant threatening to kill another tenant. This is not going to be an easy combo. And I knew that going in. So got the phone number, called the tenant. I was like, hey, look, I got this notice from the landlord. They said XYZ. Like, honestly, there's always 2 sides of every story. Like, was there something that the other tenant did, like, like kind of figuring out their side of the story?
Yeah, listening to them. Hear them out.
Yeah, and like I know it may they're gonna stretch the truth.
Of course,
right?
2 sides of every story. Yeah.
All that matters is that you're hearing them out and you gain their respect and trust. So I heard their complaints and all of that. I was like, look, like. And then obviously making it seem like leaving is the best option. I was like, look, like obviously you two are going to have problems in the foreseeable future. It's going to be constant bickering about it. And like, man, if this escalates any further, not saying that it will or it won't, then criminal record, this, that, it may, like it's going to be a huge issue for you. Yeah. And honestly, like I sincerely apologize that you're going through all of this. And I know that moving is expensive for you, but what if we can work something out, right? Because I don't want this to escalate any further. It's no way to live. So why don't I give you a few $100s for moving expenses and some time,
and I will help you.
Yeah. And then they were just like, sure, fine. Thank you for understanding, so on and so forth. But Do you think a property manager is going to do that? You think a paralegal is going to do that? No way. A paralegal just serves no, like, here, take this money and leave. Or they're paper pushers, right? Or transactional. They'd be like, this is what you did. This is what it could lead to. But they would never sit down and spend an hour, 2 hours of their time speaking with the tenant. And that is a task that will easily add thousands of dollars, will save you thousands of dollars and a ton of headaches. So all of that, I do it myself. I try to do it over the phone. But if I find over the phone is not working out over the first phone call, I'm like, hey, how about we set some time and grab coffee with each other? Sure. And I hate doing that.
Because you're driving.
I haven't found a way to systemize it.
Because you're going to Sudbury or Windsor. That's hilarious that you said that, because I've talked to novices when I raise issues of being a landlord, especially when you have a lot of tenants in urban rough area that are in tertiary markets.
Yes.
They always say, oh, just build systems around it.
How? Like, yes and no, right? Because, again, you're dealing with these tasks are very high value. Yeah. Most property managers don't know how to do it. And most paralegals don't know how to. It's like almost like sales, right? And negotiation. Yeah, exactly. So
a high value skill.
Yeah.
That are usually held by high value people.
Yeah. Like people, and man, like these negotiations went so left when I first started them out. I was a complete novice, but I would try to do it myself, and I've learned from experience how to, navigate around these conversations, especially like with sellers and wholesaling as well. A lot of them are the same profile as tenants, right? Motivated sellers. So you can outsource these out, but it's not going to get the results that you want, right? And that's the troublesome part that I've been facing for sure.
Interesting. Yeah, and then like I said, like just letting often people just offering them to let them out of their lease is a big weight off their shoulders.
Yeah, exactly. Right? But it's like how you position it. Yeah. It's not, I'm gonna let
I'm
you
not kicking you out. Like, if you want to leave, it's okay. We can break the lease.
Exactly. And it's like, moving cost is expensive. I know, headache. Da. Why don't we give you some time, right? Yeah. Like, how about I help you with all? It's positioning a lot of the times, right? And it's like
trying to be a problem solver.
Exactly. And the only way you solve a problem is by spending the first 30 minutes building rapport and understanding, like their situation. Because if you're going there and trying to solve the problem without having that small talk or that understanding in the beginning, why would they trust you of being capable to solve their problem at all, right? So that's something I've realized too.
Just this conversation, I have a tenant that owes his rent today. She said that she's behind because her father passed.
Yeah, unfortunate.
So I owe her a phone call today because it's due today. But I'm going to send her an Uber gift card first.
Nice.
Because then she can use it for Uber Eats.
Yeah.
You know what I mean? Yeah. So here's dinner on me. And then I'll call.
Yeah.
Like, hey, did you get it? Yeah. Cool. Are we good today? We're good for rent today? Like,
or at least have an understanding. It's like, oh no, okay, let's figure out, right? Like people, as soon as a tenant doesn't pay rent, it's like, it's D-Day. It's like, serve them with everything. Let's get them. I was like, dude, like, these people have lives as well. Like, what if they got let go of the job? How are they going to pay rent if they got let go of the job? You almost have to cooperate with them to some extent, because you know that the cards are heavily dealt in their hands with the regulations. Yeah. So
you gotta get on the phone.
Exactly, and understand, right? Because sometimes the more you understand, the more you realize that sometimes patience and cooperation with them, figuring out a payment plan, goes a long way than just hitting them with all of these notices. Because as soon as you do that, when you call, you think they're going to pick up? Hell no, because they think they're going to get evicted, right? So that's when people start dodging and ignoring. So you got to go in with empathy or sympathy at the very least.
Yeah, for example, I've shared this many times on my show. I explained to my team members, like contractors, property managers, I say to them, if you spend $10,000 a year at a restaurant, how do you expect to be treated? Right? My tenants all pay me over $10,000 a year. Yeah. Right? So like I need some of that to translate to them. Right? So yeah, I'm not the guy that immediately enforce. We usually exchange emails at least first.
So I do serve enforce first, but I give them the heads up. I'm like, hey, right? People just serve it and they don't even speak. I'm like, hey, this is the process, but like, don't worry about it.
Yeah. Like it goes away as soon as you pay.
Yeah, exactly. Yeah. Or like as soon as we figure out, like if you let me know it's gonna take you a few weeks to pay, let's figure that out. Sort of situation. I'm like, don't even worry about it, right? Like
because she got back to us right away that her father passed. Like I'm gonna hold off.
Yeah. And I think that's reasonable. But like it sounds reasonable. Everyone would be like, yeah, that makes sense. But like, how do you find that out? By having a good rapport with them. So most landlords will never find that info out, right? Yeah. But
we're small enough that we can have these relationships with our tenants. So actually, I want to ask you, like, you have a decent sized portfolio.
Yeah.
Do you have anyone else on staff? Do you have like an operations person or assistant?
That is I.
You do it all.
Yeah. So I find honestly the most difficult part is like stabilizing the asset. But once it's stabilized, it's not a whole ton of moving parts for the most part, right? Like if you find a good quality tenant and all of that, like your property manager does handle the bulk of it. It's just at the beginning where it's a disaster. It's like, okay, like let's choose finishes. How are we gonna add extra bedrooms? All of that stuff. That's where it becomes a little bit busy. But I don't take 5, 6, 7, 8 projects at a time now, right? Like I take like 1 or 2 projects at max, and once I stabilize it, then I'm on to the next one. So it's not like I'm killing myself with my business as well.
Right.
And the people who do a great job when they buy tenant, there's a lot of like big operators who crush it. That's just not my business model. That's just not who I am. That's just not the scale I want to get to. So I'm totally cool with just doing things myself. And once it's stabilized, then barely takes any of my time.
All right. So I actually just had Calvert Mortgages in yesterday. So because they're private lenders, they have I don't want to spoil it, but they've had a number of power sales.
Yeah. I've gotten some of them that fell across my desk as well. It's like, hey, you want to wholesale it?
Where I was going was we've covered this on the show, the commonalities between investors that failed. Not failed, but there's bumps along the way. Everyone takes losses.
Yeah.
Right. So these power sales, what was common was they're borrowing from like Calvert, so they're paying it's private money, it's expensive, and also multiple projects.
Yeah.
And by multiple projects, that means renovation projects, significant renovations. So they had multiple vacant properties.
Yeah.
Right. So you mentioned that you've done as many as like 5, 6 at a time. Now you're more like 1, 2.
Yeah.
What happened?
Yeah. So
because with 5, 6, that means you can make some big money.
When I was starting off, it was like aggressive growth by any means, right? I was like many of the investors, where it's like, oh, grow, scale. As long as they can. I wasn't flipping, but sort of the same principle where you have a ton of renos going on, and I thought that was the way to, 1, raise money, and 2, that was the way to become rich quickly. Like I looked at real estate as much as I never talk about it, I'm like, oh, long term, like we say that to ourselves, but our actions say differently. And I believed that real estate was a long term investment, but my actions clearly show I was doing something different. So it was I scaled aggressively right before the pandemic of 2020. So like I had like 4 closings right when the pandemic hit, and I was like, this is where like I'm gonna like be in a ton of trouble, pulling out from a ton of lines of credits. Am I gonna make it out from this? Like, who knows, right? Fortunately, the market picked back up. I did like even getting these deals at a discount, like getting it at a discount in a falling market. You don't know how far that that knife falls, and you don't know how marketable or liquid your property is during a falling market, right?
So your stress level must have been through the roof. Too.
Yeah, it was definitely really stressful. My expenses were lean. I was living at home with my parents, so that was a big plus. But it was not good for my mental health those couple of months. And so market recovered. Ended up doing really well in the deals, as with anyone who bought during that time. But I was very fortunate where I was almost given like a second chance, right? Like my ego I was humbled, and I was like, all right, like, let's do slow and steady growth. And there's been times where I stepped out of my comfort zone again. So we're talking offline about, so after doing slow and steady, again, you kind of invest the psychology. You see like people making money hands over fist, and people who are newer investors, like unsavvy, that are just making so much more than some overly prudent investors, right? And I fell to that camp of overly prudent during that, after COVID, right? After that sort of scare I had. And I was like, okay, like let me get a 6 unit. Got it under market value, so it appraised higher than what I bought it at. And then I took out, like, the bank only gave me 50% loan to value. They charged on a commercial loan, and I had to raise the rest through promissory notes. So I went 100% loan to value plus construction on it. And man, like, so the deal went, surface level, I could say that it went perfectly in terms of I turned over all the units. I got a full BRRRR. All my money came out, cash flowing like crazy now. But what people don't realize, during that time from when I closed it, got all that private promissory notes, to when I refied, it was like beyond stressful. It was if one thing went wrong, like how am I, like how am I going to dig myself out of this situation? It's the peace of mind is what I've realized is extremely important. So although that deal went perfectly, and again, if I was egotistical, if I didn't have that experience at the beginning of COVID, I would have continued doing that. I'm like, oh my God, full BRRRR, none of my own money, cash flowing multifamily. Let's do this again, right? But I was like, yeah, I don't feel comfortable doing this again, right? Like it went well. It's almost like, you know how crypto bros, the portfolio went, a lot of them then sell off. They're just like, hold. You could say I sold off. I was like, oh, I got like this strategy worked well, but I'm not doing it anymore, right? So then I stopped myself early, and thank God, because man, if I continue that path, like who knows, like who knows now? Like if I got a ton of projects, I'm pretty sure I would have been in trouble too. But I've learned from my experience, my short 4 or 5 years, I've learned a lot from it.
So raising capital lessons. So how did you grow so quickly? You're independently wealthy?
No. So I did a lot of joint ventureships. I'm starting off. So at the beginning, everything was my own money. It was like scaling with my own money. Then I hit a point where it's like only one project at a time, with nothing wrong with that, right? But again, this is like before the COVID. So I was like, all right, let's try to do multiple projects at a time. And there's only really 2 ways to do multiple projects at a time, right? Well, there's a couple. You can get a VTB and stuff, but I wasn't that experienced where I went down that path. So I was like, I either take private money or I raise capital through joint ventureship route. So I was like, let's do some joint ventureships, right?
So like 50-50?
50-50, capital partner, they carry the mortgage, And
the renovation money?
100% of the capital, right? So that's kind of how I was structuring it. And like the joint ventureships went really well. So what I will say is that I am pretty prudent when I come to running my numbers. So like fortunately all of the deals worked out really well. But at the same time, like I did realize I bought myself another job to some extent. Like most of my partners were fantastic, but then of course there's like times where they give input on things that they shouldn't be giving input on because they haven't done this. Like it's like almost penny pinching. Like, hey, let's try to cash for keys budget $2,000. It's like, listen, like this would add like 50-60 grand in value. Like they want to get $5,000 to 10. Let's just give them $5,000. They're like, no, 2,000. I'm like, all right, what, like, so there's those sort of feedback that I got. But for the most part,
investors are frugal.
Yeah. And I understand. On the other side of things, I would, if you're not the operator and you don't understand the full picture, you would think like, why not just negotiate lower? You're the expert, but it doesn't work like that.
Yeah. Because like, we've seen cash for keys for like between 5,000-15,000.
Yeah. I paid $12,000 for cash for keys before. Like and still then I was like perfect return on investment. Right. But
I need to find the example, but I remember several years ago, rent control building in New York, the developer already bought it. Yeah. They need to they're going to tear it down and put up something big, right? One tenant, they have one holdout. You want to guess cash for keys for the very last tenant?
Probably like $50,000, $40,000.
It was over $1 million.
Wow.
I gotta find the article. I'll find you the article.
God.
Right?
That's crazy.
Adam should probably delete that so no one gets that idea. But right?
Yeah.
Like for, someone was standing in the way of a large condo development, right? But yeah. So so for that's tough that you're getting input from people who don't have experience.
Yeah. So I don't want to phrase it such that like it happens very commonly. It's definitely happened a few times, but most of I think having JVs was essential for my journey, for my growth, for my confidence on social media as well. Like, of course, social media is all about like the number and the vanity metrics, but it was essential for my journey. But the last couple of the last 2 properties were still joint ventured. One of them was myself, and the last 2 bigger multis, or not bigger, like 6-8 units, I did that myself with one of my other business partners. Like we're both putting capital, but I figured like now control matters a lot more to me, and I'm okay with having like slower growth as a result of that. That being said, I still do joint ventureships with people that I have a good relationship with, that have done properties with me in the past. And I think that's really, because people do JVs successfully. A lot of people will like to shit on JVs, but people do it successfully and grow a business with that. It's just a matter of putting their processes in place. Right. You want to work with people who are easy to work with and do repeat business with you. So when I do JVs, that's the angle I've turned down so many people, which I would have never done before. I was like, capital? Yeah, let's partner. No, it's like if you have capital, it doesn't matter, right? Like, I need to see a long-term relationship with you. So yeah, a lot of the growth was that. And then full BRRRs plus some money out. So leveraging off of that.
It does seem like every partner who does take on partners has a journey.
Yes.
And usually within the first couple, there's people they don't get along with. Right. So how many JV partners do you think have come through your world?
Probably like 8 to 10.
8 to 10. And you currently still have?
I have 4 or 5 now. A couple of them, most of them have been repeat. Like of those, like most have been repeat, which is good.
So what are your lessons learned?
Qualifying people at the beginning, making sure their intentions are aligned, and then walking them through worst case scenario, almost selling them out of it, right? Like not like letting them know the realistic picture, right?
So don't just tell them it's sunshine and rainbows.
Yeah. So right now, recent JV convo I had, like qualifying, I was like, where's your source of capital coming? A HELOC. I was like, I don't know, man. Like 7% rates. Like what happens if I can't pull a dime out until like 3 or 4 years? Are you okay with that? Because like that's going to be stressful for you. So that conversation, right? Like walking them through if they thought through the whole picture. Because here's the thing, like I'm an investor, you're an investor. Most people who listen to this podcast are investors. You guys, when you're injecting your own capital, you know the things that are in consideration in your mind. Yeah. Communicate all of that to the partner as well. Some people like to hide things with the partner. So being completely transparent in that sense, not making sure it's not every dime that they have. They need to have a decent amount of reserves that are not invested into real estate. That's pretty important as well. Stable full-time income, sort of the long-term view. Are you looking 3, 4, 5 years out? What their expectations are. At the beginning, everyone's expectation was I want a full BRRRR. Now I set the expectation that may not be possible, right? So a lot of it is just being realistic.
Interesting. Hopefully, I'm enjoying this personally. Hopefully, the listeners enjoying this. We're joking around as well because like your path has been very aggressive. Tertiary markets. Yes. You don't invest within 4 hours of where you live.
Yeah, basically, it needs to be at least 4 hours away.
And you mentioned that you want things to be easier.
Yes.
So you're choosing easier properties, like less. It seems like you're buying less disasters.
Yeah.
Better markets.
Better markets, better neighborhoods. So I do still see the value in tertiary markets, right? Because there's more information asymmetry there. I find there's usually better deals and a disparity between knowledge of like a local investors or local realtors and what's and what the value's truly worth, strategic rental. I feel like that info is more people are savvy in these big cities, so it's a little bit harder to operate the business model that I want. That being said, I've ran into so many troubles with some of the less desirable properties that I've had, right? Where it's like in not good neighborhoods. We talked about we talked about this offline, a property being burned down by an arsonist in one of the worst neighborhoods in Windsor. And that was such a pain in the ass. So that was one thing. Non-payment of rent, tenants losing their jobs, and these are mostly concentrated in not the most desirable neighborhoods. Right. So if I am to invest in these tertiary markets, it needs to be in high quality neighborhoods, right? And I am okay to sit with 4 or 5 months vacancy to find the right tenant. So I've just really adjusted my expectation on a lot of things, and even slowly moving my portfolio again to some of these like bigger cities. Like I wouldn't say I would come down to Toronto. You need big money and you need big financing to be able to make that work. But like London, Ontario, right? That's a more stable market than like Sudbury or something. Like, and not to shit on Sudbury and all this market. I still invest there. It just has to fit my criteria has changed for sure, but
2 hours drive instead of 4.
Yeah, 2 hours exactly. But I'm okay with that. Like I'm not driving everywhere, right? So less headaches has been a priority for me because I've had cases again, houses burning down, right, tenant quality being crap, and I'm involved in all of that, right, and I just want less of that. That's not why I got into investing. I've built great skill sets doing those things, but I don't want to exercise those skill sets anymore.
Mm-hmm, mm-hmm. Julie Broad wrote a great book called More Than Cash Flow. Mm-hmm. Like there's more to being an investor than just what it looks like on a spreadsheet.
Yeah.
Because they detail themselves about a property, a multifamily they bought, and it happened that the property manager and a tenant got in a fist fight, and then the tenant actually got injured quite badly. Oh. Right. So there was lawsuit. Yeah. Right. Property wasn't in a good area. Right. But yeah, it seems that there's stay out of bad areas.
Yeah.
You have less trouble,
Mm-hmm.
right? Because I'm sure it looked great on the spreadsheet. But
the quantitative part looks great. Qualitative is different. I almost neglected qualitative a lot of the times for quantitative, and that I'm finding that balance of why both are so important now.
Right. Yeah, because we're joking how my clients are buying pretty lazy property compared to what you're doing. Well, we'll dig into it a bit later, but I want to go in more about this this house that burnt down. Sure. What was it? Triplex or something?
It was a 4-unit, so we got it during COVID as well. So it was a really good discount. It was a house that was filled with drug users. It was a drug house, right? Bad neighborhood drug house.
Wait, who financed this?
RBC financed.
Okay.
Yeah, but they
wait. What did the appraisers say?
Nothing.
They didn't go in, right? It's COVID.
Yeah, it was during COVID. Yeah,
okay.
So, things appear better in photos sometimes, but yeah. So I mean, it was we got it financed, and then served notices on different things. Got everyone to agree to leave. They don't really care. I mean, they're mobile. The house was kind of beat up as well, and so. Sorry, it wasn't RBC, it was Scotia, but same thing, same principle. It was during COVID, so photos.
So photos, no on-site appraisal.
Exactly, yeah. And things were going as planned. Everyone signed. Everyone agreed to move out. Move out date. No one moved out. LTB served the eviction notice. Sheriff eviction was scheduled, and then what happened during COVID? No evictions, right? And so got the sheriff eviction notices, but no sheriff obviously came, and so. The people were just sitting there rent-free, whatever. I didn't think too much of it because I was like, yeah, once they leave, the upside was incredible. It was like a pretty big 4-unit. Now it's vacant. It's like, I'm going to make a lot of money on this thing.
Sorry, did you have a partner on this one as well?
Yes, I had a partner on this one.
And they were chill? They were cool?
They were chill. This was a great partner to work with, yeah. The numbers were perfect. Everything was panning out as planned. Cash for keys was only $1,000 a unit. So... Then what ended up happening is that obviously we're waiting until the sheriff comes or whenever they are able to come. And the house went on fire. Got a call from my partner at night. It was 11 p.m. I ignored it. It's 11 p.m. I'm sleeping. I was like, all right, whatever. Call them tomorrow. Then they called again. I was like, it's not good news. They're calling twice at night. Picked it up. They explained, like, hey, our house is on fire. The police called me. I was like, oh my God. I was like, all right.
So they called your partner because they're on title? Or...
Yeah. And then they called me. And so, I mean, it was like, there's nothing we could do. There was very limited information. House is on fire. What can you do? Just fire department comes, puts it out. Wait for the information tomorrow. Sleepless night. And I don't hear back from anyone, the police, anything. I called the police. No new information, anything that they could share. Went on Google, search my property. My property's on a bunch of news articles. And then one person passed away from that fire. So now this becomes like a liability thing, right? Because the house had knob and tube, but the insurance was aware. I was aware. Everyone was aware. It's not like we hid that from anyone, right? I was like, oh my God, is this a knob and tube thing? Like what? My mind is running a million miles per minute, right? So I'm like, oh my God, if it is, like I could actually face like legal troubles because someone has passed away. So started speaking with lawyers and all of this stuff. And started making the drive down to Windsor, right? The day after, spoke with the lawyer. The lawyer's like, turn back around, man. Don't make that drive down. He's like, why? He's like, look, there's gonna be police there. Like, what if they pull you in for questioning? He's like, what? He's like, what? Like, what do you plan to get out of it? I was like, look, my house went on fire. It's reasonable. I want to see what's happening if everyone's okay. He's like, yeah, but like, what do you plan to get out of that? Like, what if they pulled you in for questioning? Like, you don't just like wait and see how this sort of pans out. Then someone else passes away. None of these people have next in kin.
From their injuries from the fire?
From the injuries,
right.
Yeah. And I was like, oh my gosh, this is like a disastrous situation. I cannot sleep. I feel terrible. My stomach is turning. And really, like, I had no one to help me out. I've asked for help, right, from like coaches, mentors, and they were just like, go through insurance. And they've gone through a situation like that. I don't think they've had anyone passed away, but they're just like, I just figure it out. And
wait, they wouldn't even get on the phone with you?
I mean, they left a voice note. Yeah, they left a voice note. I left a voice note. I received a voice note, sort of thing. But yeah,
no,
not much. No. So I was like, okay, I guess I'm in this on my own.
I know we're gonna dig into it,
Yeah.
but this is a coach you're paying for,
Yes, this is a coach. Yeah,
and they wouldn't get on the phone with you. Because
I got a message and that was about it, and it was basically like go run it through your insurance to figure everything out. So I was like,
that's it.
All right, yeah, I'm like got to figure it out on my own now. So.
I'd be pissed.
So I spoke with well, of course I was. I like speaking about this right now. I was telling you like it gets me a little bit upset, right? So I don't like to dive too deep into it a lot of the times because I do get a little bit. I get upset. And I hope people understand why.
Well,
and
because
so,
eventually you have to move on. You have to forgive and forget.
Yeah. So I spoke with the insurance people, the lawyer, so on and so forth. And about a week later, just sitting patiently waiting, find out that it was an arsonist, right? So I was like, okay, like really, it's peace of mind that there's nothing I could have done to not prevent this from happening.
Right.
It was out of my circumstance.
How quickly did they find?
In a week.
That was pretty quick.
Yeah, it was pretty quick. The Ontario Fire Marshal and everyone was there.
Do you have any idea how they figured it out?
I didn't. Honestly, like when I found that out, I was like, okay, great. Like this is not something I could have done differently to prevent lives.
Yeah, you can't stop arson, bro.
No, it's just the person went to jail, and it's probably something drug related because it is a known drug building, right? But here's the thing: had the sheriff been able to come and the evictions weren't held up, everyone's life would be intact.
Yeah.
Right. And nothing like this is almost like I don't even think I could have projected for something like this to happen. Right. Like if everything went as it should have and all of these pandemic sort of rules didn't come into place, like then no one's lives would have been lost and the deal would have went as planned. But yeah, that was that deal in a nutshell. So insurance tried to screw me over. So we had to hire a lawyer to be on their butt. Apparently with the insurance provider we use, I'm not going to name names, but they said that like, our insurance broker was saying that after a year, if there's no payout, then you can't go after the money.
Shut
right?
up.
Yeah. Or like it becomes significantly hard. You have to go to court and all. So they were winding down the shot clock, the insurance people. So they're ignoring us. So we had to hire a lawyer and retainer to be on their butt.
Was there any reasoning given for the delay?
Yeah, they were just like, we want to speak with your property manager. And my property manager is like, dude, like I have nothing to do with it. Obviously I understand property manager's like, dude, like they're going to try to blame something on me, right?
How? It's arson.
Yeah, no, yeah, exactly. It's arson. So, but they were still super worried. They're like, oh, they're going to say I didn't visit the property enough, this, that, whatever. So they were worried.
To prevent arson?
Yeah, I don't know, man. Like they were a little bit worried. Eventually we convinced them to do it. So they ended up doing it. We hired a lawyer for the property manager, which I think is responsible for the property manager. Want to have a combo with an adjuster with the lawyer. It's good, right? Getting a lawyer doesn't harm anything. So we paid and then they had the convo and then the insurance company went MIA on us and for like 8 months and kept on following up. Yeah. And then the last day before the payout, our lawyer said we can register this sort of, I don't remember the technicality. We can register something that shows we've done everything we can and then we have to take it to court after. Then that last day they paid us out and I was like, okay, hallelujah, thank you. But it was being
That's
set
scary.
up for disaster.
It's like they're checking to make sure you covered all your bases before they decide to pay you.
Yeah, no, they were just trying to run down. Yeah, exactly. If we didn't register I don't remember what it was called. The lawyer's like, you could get into a heap of trouble because the insurance company said, yeah, we'll pay you out by end of day today, last day. Then he's like, you have to spend $3,000, $4,000 to write this letter. It's like, I don't know. He's like, it's up to you. I would suggest you do it, Austin. I was like, jeez. God, I have to spend another few thousand. Let's do it because I don't trust these guys anymore. But when we registered the letter, they ended up releasing the funds to us.
Okay.
Bad areas, bad neighborhoods, right? These are preventative measures. Yeah.
So what do you do with the property?
Now it's just vacant land at the moment because by the time all of this got settled out, it was near the peak of the market, right? And so the interest rates started going up. So we didn't decide to develop or do anything on it. We're like, let's just hold off on this. We own this land free and clear. Plus we have an additional payout. We can explore developing it later.
Sorry, how come it's free and clear?
The insurance paid out
Okay.
a large, so you have to pay out Scotia as well because the property's not there. So we own the land free and clear, and we have like a payout as well. So we're just sitting and just land banking at the moment, and we can't. Vacant land is not really as saleable right now.
In that area,
yeah, in that area. So.
It's not a good area.
Exactly. But
someone wants to build a custom home, ain't coming.
That ain't happening. No, like really.
Like a beautiful 4,000 square foot home, they ain't doing that.
And the other thing is the zoning. The zoning it was grandfathered in the 4 unit, so it's really up to
legal
duplex.
non-conforming 4.
Yeah. So now it's like, is someone going to be able to build a 4? Probably not, unless, committee of adjustments, and I doubt they will.
Right.
Maybe there's precedence. There's a lot of 4 units and 6 units, but all of them have been grandfathered in.
But
right?
you're chancing it.
Yes. You're spending a lot more money and taking a lot more risk than you would have
Damn.
otherwise. But I don't worry about that one too much now, because there's really there's no risk. It's just land now, right?
We might want to talk to my realtor, like Matt Bigley, about it. See, in case, because a lot of cities have changed their bylaws and zoning to allow for more units.
Yeah,
I would think Windsor is not far from that.
Yeah, the lot size is quite small. It's 30 frontage.
Oh,
and it's deeper, right? So the 4 unit was built really deep, and the parking was at the back. I just don't think it would have the side offsets and all of that. But still, like, it's not I'm not in a rush to do it. Bad area, one, because I know development. Like, I don't want to really develop in a bad area, because I know there's going to be break-ins, materials being stolen. Like, I can't even imagine the amount of headache it's going to be. So I'll wait till the market recovers and sell it off, because we're not really losing anything by holding it right now. Yeah.
Okay. Yeah. Okay. So just to not scare folks, my client had a different insurance company, likely the same one I use. So they had to fire the tenant's guest improperly dispose of a cigarette, like probably right on the house. No. So a bedroom was lost. But you lose a bedroom, you lose a lot, right? So so she got pretty much a brand new house out of it, but everything was quite smooth. Yeah.
You gotta watch out with which insurance company that you use, right? And these are like learning lessons for me. Is like, what's the most affordable option? Because you don't imagine a house is gonna go on fire.
Arson, man.
Yeah, arson.
Not common.
Yeah.
No.
And so like now, I'm much more wary of that, right? Like I look through the insurance coverage, or I'll speak with my my broker, and it's not my broker's fault, because it's ultimately the investor's fault. I'm just like, yo, get me the cheapest one. So it's not his fault, it's my fault at the end, not taking accountability for it. So I've learned from that as well. Yeah.
Awesome. All right, but this isn't all scary, because you've done well for yourself. Have you not?
Yeah, I would say I've done really well for myself, where I've gotten to the position where I can definitely choose to work or not to work. So I'm scaling in a much more responsible manner. I don't feel rushed to do anything. I've hit my major goal of quitting my full-time job. I'm obviously selecting entrepreneurship, but having the ability and the finances to be able to make that selection without being stressful, right? Like, because during where wholesaling was drying up, and we were putting a lot of money into it, or like we had savings in wholesaling, but the bank account in wholesaling was going down. I wasn't stressed. Like, I had my liquidity. I've done well for myself. I participated in the bull market. I didn't over leverage. Again, the last time I refied was when I quit my job, which is in 2021 in February. So all of these properties were below 80% loan to value. So yeah, I think I've definitely adjusted my portfolio accordingly since I've gotten started investing.
What would you tell a new investor? So that's Adam's question. What would you tell a new investor today to do?
Be responsible with your growth, right? And realize that in social media, not everything, not all the answers are in social media. Social media is like basically just a contest of who's doing the biggest and best things, and you see a lot of people go quiet when things hit the fan, right? So do things at your own pace. Understand risk, right? Yeah. Understand that mindset is important, but mindset isn't necessarily an excuse for ignorance. I feel like that's a lot of people's downfall, is like mindset was number one, where all mindset triumphed risk mitigation in their back of that voice in the back of your head can definitely hold you back, but it can also keep you responsible, right? Yeah. So understand that risk management is extremely important in real estate. It's a long-term investment, and slow and steady growth is the best way to go about it, right? For most people.
It's funny because like I have some friends who are like very, very good entrepreneurs. Yeah. And one of them said to me, like, mindset important, like being a visionary important. Yeah. But there's lots of them. Yeah. It's actually the execution that's hard.
Yeah. You need both. You need like almost like both. Either you have the skill set in both, or you need like a partner who's able to bring that other balance, because you could get out of control, right? And then take on more.
Because you know people who have.
Everyone has probably known people in the community. Yeah. That's gone.
Well, you're you were in
Yeah.
certain communities that are very aggressive,
Yes.
right?
Yeah. And like some people make it out, some people don't, but
Which is
like
crazy. It's not so it's supposed to be.
yeah, but the people who make it out, like even me, like it was earlier for me. It was 2020 where I've had that thing like sort of downturn, but it was like just a blip. I survived that, but that was enough for a wake up call for me, where it's like let's change the way that I approach things. But not everyone is that lucky.
Okay. So say Austin Yeh is a beginner today.
Yeah.
What are you telling him to do? How are you telling him to invest?
How am I telling him to invest?
Yeah.
Yes. So
in this current market that we're in.
Sure. Yeah. Honestly, when I got started off, I had about $40,000 saved, and I know I kind of what I was talking about earlier is like invest where there's like a little bit of headache, but the reality is when you're capital constrained, it's better to be in the market. That's what led me to be successful. I was able to get in the market and just not participate at all. So I would find a market where you can stretch that $40,000 to make it work for you, whether that be entry-level fixer flips or entry-level BRRRs, to first like understand the mechanics of real estate with relatively low capital risk, right? Cash flowing assets, exploring the BRRRR or partnering with someone who has capital. Both of you guys are starting off investing and working together through that, and then slowly scaling your portfolio down that way. That's one thing I feel like I've done right in my investing journey is that rather than complaining that, which is a lot of people, I can't invest in Toronto, only have this much. I didn't do that. I got off my ass and I found an opportunity that I could take advantage of. And that's what led to the majority of my wealth. Had I not made that first step, I wouldn't be sort of where I am. And now I'm repositioning, right? So I had to go through that headache. I had to learn those skill sets. I had to be willing to eat shit, for lack of better words, to be able to build something, sell things off, and then be able to slowly pivot back in to some of these major markets, right? So it's better to be in the market than not to be involved at all, right? Because if you're sitting with 40 or 50,000 and waiting to be invested in Toronto, Hamilton, London, Ontario, buddy, you're going to be waiting forever.
Yeah, that's not enough.
Yeah.
So say I want to start in Windsor, for example.
Sure.
How much do I need to start? How much capital?
A lot more. So I think most single families are going for like 400,000 now. I would almost move it towards Northern Ontario, honestly, to sort of start it off. And
how far north?
Sudbury, right?
Well, sorry, was a single family home in Sudbury?
Sudbury, it depends on which area. Like you can get some in the 200s, you can get some in the 300s, right? So you can make the numbers work there in Sudbury still. But again, like just understand that it may not be ideal, but it is a stepping stone, because sometimes it is easier to get in the market than just to not participate at all, right? Because you learn the most when you're involved in these transactions. So yeah, I mean, I would look for a cash flowing market somewhere, something that you can afford, whether that be turnkey or whether that be a value add, ideally value add to make your money sort of work for you. And if you don't have enough for value add, find someone who's new again and kind of partner up there and build a home base and scale from there. That's exactly my blueprint in Windsor. And I've made mistakes like on how I've gone about like bad neighborhoods, so on and so forth. But the general blueprint, I would do the exact same. Maybe like some of those small decisions I made that were wrong, I would exchange. But yeah, and then from there again, you can reallocate your portfolio accordingly.
Right, but that's for starter Austin Yeh. What about modern day Austin Yeh?
Modern day Austin Yeh, yeah, that is good neighborhoods.
Because you said you have a house in Toronto that you're working on.
Yeah. So man,
downtown.
I would never ever imagine Toronto. I was always like, cash flow, why would anyone do anything in Toronto? Yeah, so I got a deal in Toronto, $830K in Little Portugal, a semi-detached house, 92% vendor take back, 3.2% interest rate. I can do a duplex conversion. I was looking at a couple of options. An architect said I could do a duplex conversion on a pretty decent budget there. I could do a single family flip, or I could live in it myself.
Right. So you have multiple options.
I have multiple options, yeah. And here's the big thing is I don't mind living in it myself if none of those things pan out, right? So
fiance approval awaiting, but yeah.
Yeah, no, she's approved it. She's approved.
Okay.
She would love to live in a semi in near downtown Toronto. So yeah, I mean, that has multiple exit strategies. And also, I mean, you think about it, like the VTB, right? The VTB is 3.2%. So the carrying cost is not significant for a project like this. And again, like you're talking about Toronto, less than $1 million for a semi in a prime area. So I feel like the risk is relatively low there. I would have to go back to 2017, 2018 prices for me to lose money on this deal. Yeah.
How'd you get to the VTB on this one?
The guy owned it out in cash. He was 79 years old. First, we were doing everything traditional. And I was like, oh, man, the numbers aren't going to work as much if I get private, too much risk, so on and so forth. I was like, hey, do you own this in cash? He said yes. I was like, do you know what a vendor take back is? No. Then just explained it to him. And the guy was really cooperative, right? Not every seller is going to be super cooperative, but he was. And so we started with 95%. And then he's like, I'm okay. Then the lawyer's like, no, I don't like 95% too much. So I was like, he's like, Austin, can you do any better? I was like, 92. And he said, sure.
92 is better than 95.
Yeah, I'm not going to sell myself short. So he said 90. Yeah, it worked out. It worked out really well. This one isn't really as much of a negotiation tip. The person was just really easy to work with.
Sorry.
Yeah, all good.
I'll take a second, Adam. Sorry, you made me laugh. This was just seeing the stretch.
Yeah, no one can take anything away from this. No one can be like 92. No, it just ended up being luck that the guy was super flexible.
You get at him? All right. What was it about the VTB that was attractive to the seller?
He, 79-year-old, so different sort of person, not an investor with apartment buildings or anything like that. Very much an investor who has bought one or two properties at a time, sit on it for 10 years, let it depreciate and sell. Different sort of investor than you and I are, right? So obviously their priorities, their goals are a little bit different. The guy's 79 years old. He's like done holding properties. He's done what he's done in real estate. And so he just wanted to, I could tell that he just wanted to make sure that the next generation or whoever's buying this to succeed, right? Almost like a mentorship sort of role. And you can get that vibe from him. We sat on the porch and we spoke for an hour just about randomness, building rapport and all of that. And I could tell that he was like, he liked being that guidance figure. So he wanted to just make things work for me, right? So it wasn't about what's appealing of a VTB, because surely there's nothing appealing for him in a VTB, right? Like save on capital gains, this, that, whatever. Who cares? The guy's 79, right? Not a huge deal. And he's made a lot of money in real estate already. So it was just more so I explained to him, like, this is how I'm looking at things. He agreed with me through my thought process and was like, this is what I need to make it work because this is how it changes the numbers. And he was just willing to give that, right? So it's almost like knowing, I guess it is knowing who you're negotiating with, right? Like I feel like elderly people who have had all the success in the world, they fall into two camps. One of them stubborn in prices. If you don't meet my price, then doesn't matter. I can just hold on to this thing. And the other one is like actually wants to get rid of the portfolio and doesn't mind taking that sort of mentorship or guidance approach with the person who's buying it next. And that's where he fell into.
So how'd you find the property?
Yeah, this was from a bird dog, actually. So I have a couple bird dogs in the wholesaling program. And one of the things that we do is, well, multiple things that we do is, again, expired listing, Kijiji ads, door knocking, cold calling, so on and so forth. This is from a Kijiji ad. We were just one of the first ones to reach out. The guy was first, he didn't want to negotiate on price at all, so $870. And then the numbers didn't work out at $870. We had it under conditions for a month, 30-day inspection condition. By the end of the 30 days, we're like, look, like we tried our best, whatever way we cut it, whatever quote we get, the numbers aren't going to work out. So by the end of the 30 days, we're like, we're still interested, but it needs to be at this price. His tune changed because it was under contract for 30 days. He's like, let's just get this to the finish line. First, he wasn't negotiable. And so by waiving conditions and negotiating the price lower, we got the deal done. But again, we're competing against another wholesaler on this deal, a really big and more experienced wholesaler as well. And same thing, the guy was not willing to budge on pricing. I guess the other wholesaler tried to push too much on the pricing aspect. So we just took it down instead. We weren't able to find a buyer and we weren't able to do it ourselves, not at the price we got it under contract for.
But $870 sounds pretty cheap.
It is, but it's located on Dufferin, so right on the main road. So you do take a haircut on price, and you do take a haircut.
So it's on a busy road. It's
on
a main road.
Yeah, so marketability is going to be something to consider. $870 is still a good price. Don't get me wrong, but it's marketability. There's risk at that point. It's not like a no-brainer price. Like you want to get it at the lower 800s. right? Especially when he wasn't giving any VTB or anything. So private money and all of that, you add that in. Your transaction cost before doing anything in the property, land transfer tax, all of that, like it's probably like low mid 900s right before touching anything. So it didn't work out for a lot of people, including ourselves. But at the end of the condition, a lot of people, if they dedicated that much time with you throughout the process, they would rather just work with you than start from square one again. So we had that advantage. 30 days passed and the markets picked up. So we started seeing recent comms. I'm like, oh, these numbers are juicy, but let's get it down to this price. And
Right.
it all worked out.
Right.
Yeah.
So the deal made sense, so you got it done.
Yeah, the deal made sense, especially with like the past 30 days have been insanity, right? So the comms started showing us like, all right, this is like a
Could
really
you just
good
sell it
deal
as
now.
is?
Yeah, I think I could. But you know, like a lot of the competition is the turnkey assets because it's end users.
Yeah. Is there anything wrong with the property that?
No. No. There's nothing wrong with it. The other wholesaler who's really experienced as well, we chatted through it after I waived condition. He's like, yeah, like his thought process was exactly aligned with mine, right? And he's seen probably 5 to 10 times more properties than I ever saw. So yeah, I mean, we both didn't catch anything.
And then how much is the renovation budget?
Renovation budget is about 85 grand.
That's not much.
No, not much at all. Yeah, like if I was to show you photos of it, it is not a garbage property. It is in decent condition, but not Toronto good condition. Like you take this and you throw it in Windsor, rentable. Throw it in Sudbury, rentable. Throw it in London, Ontario, probably rentable. It's just not price optimized in our market.
And then what do you think you'd sell for?
Initially, I was hoping for 1.1. But now just the way that the market's going, I wouldn't be surprised for 1.2.
Fantastic. All right, Austin, thank you for being so generous with your time.
For sure.
Any final thoughts you want to share?
Not necessarily. I think real estate, I guess this is more of a shout out to you. I like the conversations that we have because not everything is just like, you know, all roses and things are going well. Like things do happen in real estate investing, and I feel like this is the only podcast where I've been given the platform to not only share the successes, but you know, a lot of the struggles I've gone through it. If you look at my Instagram, you can't really, maybe I share struggles here and there, but you know, like a lot of it's on stories, it gets lost or whatever the case is. But investors who achieve big things have gone through the fair share of struggles, right? And I think people need to realize that. I'm speak to many first-time investors who get into, like just one I was speaking to on Instagram, get no names. They got into investing with their first asset. They thought things were going to be great, and then basement leak. They have to do exterior waterproofing. Open work permit that the lawyer didn't catch. Like, this is the reality of investing, right? Like, not everything is all rosy, and if it's your first property where you get caught offside, it could really deteriorate you from moving forward. So really just make sure to do your due diligence and be slow and steady.
Inspect the house.
Yeah.
Full title.
Well, or even then, like I don't think there was moisture or significant, I don't know. I wasn't doing the due diligence but like these are things that can happen if you get too ahead of yourselves, right? Educate yourself, take action, don't get stuck in analysis paralysis, but that also is not an excuse for being stupid and just rushing into things. Yeah.
Crazy.
Mm-hmm.
Yeah. Inspect the house. You're a novice. Inspect it.
Yeah. But it's like it's hard to blame them as well. Like bad advice from a lot of people, right? All around.
There's tons of bad advice out there.
Yeah, and I just feel for these people when we have the conversations. Like, what can you do? It's like you got to go through title insurance and just hope for the best, or you got to see if they're gonna the seller is gonna give you any sort of reimbursement, which they're not. Right, I highly doubt it.
You have to go to court probably.
Yeah, if the seller knew about this, and what are the chances they're gonna
Hopefully
give you any
it's a small one, like a porch.
I don't know what it is. But even then, it's still even a small one is thousands of dollars that it shouldn't have costs.
No, hopefully it's like a handrail or something. You know, a few $100, right?
Yeah.
Hopefully it's not like a like an addition on the house.
Yeah.
And Austin, where can people follow your journey?
Yeah, on Instagram at Austin Yeh 6 on Instagram, and then I have my link tree on there, and you can just take a look at everything.
What's the 6 for?
I don't know. Since I was young, I just it was the only thing available. My email is the same thing, austinj6@gmail.com. Everything's just austinj6.
Oh, just because there's too many Austin Yehs out there.
This is what Google or Hotmail recommended a long time ago, and I just went with it.
Cool.
Nothing creative about it.
Yeah, well, you're in the 6, so.
Yeah, I guess it works out. Yeah.
Oh, before we go, I want you've been trying to buy condos off market.
Yes, I have.
Assignments. You've been looking for new construction assignments.
I've had success with it before in the pandemic, which is why I'm trying to repeat it again. You know, at peak fear, people want to hoard liquidity, and condo assignments are something that require a lot of liquidity for people. You have to pay out profit. Most of them are international buyers, so you got to put 30%. So with my first condo,
especially if they're not appraising, they got to come up with even more money to
close.
But
a lot of them are, like with the ones I'm looking for, they need to have a lot of juice in the deal, which there were quite a bit, but they require a lot of capital. Like the first time I did it, which is the primary I live in right now, I got it for $600,000, March 2020 assignment deal, and 730 square feet in downtown Toronto, pre-con, right? So I live in it now. And then we just sold it. So I was looking for another one now where it's like, how can I get 150K equity on the buy, not compete with a lot of people? Because either people are fearful of that, people are not actively looking, or people just don't want to throw their liquidity in that. So I've been on the hunt, but I'm just not. It's a little bit different than it was before. Before, people were asking for a little bit more reasonable profit or break even in March 2020. Now they're still great prices, right? But they're still asking for profit. And so the injection is 350K for the best deals, right? Because most people can't afford that.
Right.
I could do that, but it just limits my ability to make any sort of investment moves. And I've kind of abandoned that. And that little Portugal, fortunately I did, because a little Portugal deal fell in my hand, and that's an even better deal. But you know, when everyone's running away from a strategy, there might be opportunity there, especially if you're looking for a primary. There may be opportunity there for you. Yeah. You just need the cash.
That's super cool, because I DM'd you about that. That was super cool when you're posting like your negotiations with folks.
Yeah.
What do you think a good price to pay is then per square foot on a?
Oh, I'm greedy. Like anything needs to be below 1,000 a square. So Young and Egg, like the person was willing to do, I think it was $920 per square feet. So it was a 3-bed, 2-bath, no parking though, and I think they wanted $760, and it was 800 and something square feet. And I was like, no, thank you. I'm like, sir, it has to be below $900 a square feet. And they were entertaining it. Then someone came and scooped it up. And I was over negotiated. But that's okay. Like, that's not my bread and butter strategy. If I get something that is too good to turn down, I'll do it. But if it is not too good to turn down, then I don't care enough to do it. I'll buy resale and just work on getting leads that way.
I just love the idea that you're trying to find a deal for a primary.
Yeah.
In the assignment market, because I've told people to do that. You're looking for a deal, go find something in the assignment market. Yeah.
But it is still a numbers game. You got to pick up the phone and call, see who's negotiable, who's not. People who are signing 2019 deals, there's not a ton of meat on the bone. 2020, not a ton. Like these are like 2017, 2018. That are about to be completed this year or next year. That's where there's meat on the bone, right? And I'm almost trying to convince them to take minimum profit, which has not been a very successful endeavor. But again, I'm not in any rush, so that's okay.
Awesome. I think it's a pretty good pro tip there.
Yeah.
All right, awesome. All right. Thanks, Austin, for coming in.
Yeah, appreciate you for having me.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link's also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.